This video is one that I have been wanting to make for quite some time. In fact, in a video I did a couple months ago, I asked people if they wanted to see this, and a bunch of people said in the comments they did, and I'm finally glad to be making it, especially from beautiful Miami Beach out here by the ocean today, because it is a gorgeous beach day. And since this video is going to be all about pros and cons and contrast, what better way to contrast and show the pros and cons of the potential economic collapse than from right out here beachside. Now this video is going to be exactly like I said in the title. It's going to be the pros and the cons. And you might say for a second, how can there be pros to the economic collapse? And the reason is, guys, because there are opportunities and good things that come no matter what's happening out there. And that's what I really wanted to focus on in today's video. So let's jump into what the pros and cons are. And for people who always say that the videos are negative, we'll start with the pros of each one of these. The first one. This is going to be a great opportunity for anyone looking to potentially start a new business or switch careers right now, because when you have the economy on a downturn, there's always opportunity, and it especially comes in the form of a new job opportunity that maybe you didn't have before, especially if you get laid off from a current job. In fact, I can think of one of my subscribers right off the top of my head, Kathleen. We've been in touch for a while, and I've shared some of her story here on the channel before. She was unemployed for a little over 2 months, guys. So no job, 2 months. She was making about 18 bucks an hour, and now at her new job, she's gonna be making about $33 an hour. So talk about a blessing in disguise. Obviously it sucks to get laid off, but you know, she got laid off and ended up getting a much better job. So much to the point where she's now going to be able to start getting out of credit card debt and start saving money, just like we talk about here on the channel, okay? And obviously the downside to all of this is that a lot of people are going to lose their jobs. That's the con, okay? And people are going to go through hardship from this, and there's really no way around it, unfortunately, because as the economy contracts, it's going to be natural for businesses wanting to cut their expenses and cut their losses anywhere possible. And unfortunately, their employees are just casualties from this. Just like we saw during the pandemic of a lot of businesses being closed overnight unexpectedly, you can start seeing a lot of that happen again. And look what happened. You know, a lot of people during the pandemic found other ways to make money. They ended up getting a better job than what they had before. And these are the type of opportunities you need to be on the lookout for. Now this next one is probably going to be a pro or a con, depending on your outlook and your perspective on life. And that is, I consider this a pro, by the way, that asset prices of all kinds are going to go down. Everything that is worth something is going to become cheaper. And why is that a good thing? Because it gives you the opportunity to buy a valuable asset at a lower price than what people were paying during the height of the mania. Think of things like real estate. Think of things like gold and silver. Think of things like stocks. Think of things like cars or any type of toys, ATVs, things like that. Now those aren't really assets, but they're things that people want and buy, and you can potentially get them at a discount as the economy is in trouble. And the downside, the con to all of this, is that if you want or need to borrow money to buy any of these assets, it now is going to be more expensive, because gone are the days of the extremely low interest rates, and most likely those days are going to be gone forever, guys. Now, forever is a strong word, and nobody really knows. You know, maybe it won't be gone forever, but it's definitely going to be gone for the foreseeable future. And when rates start coming back down, for example, mortgage rates, don't expect to see 3% mortgage rates probably ever again. Is it possible? Sure. But I think it's highly unlikely, especially since we have a huge hole to dig ourselves out of financially in this country right now, and really worldwide. So the only way to do that is to keep interest rates high to continue curbing inflation. So if you need to borrow money to buy any of these assets, then this is probably a con for you. And to actually put a double pro on that one is, because it's more expensive to borrow, a lot less people are probably going to be buying these assets, which in turn is a pro, because that means less competition for you. So that's a good thing in my opinion. So you see how there's pros and cons to all of this, guys. Now to me, this is a pro, and that is, this is going to be a necessary correction. We need this to happen, guys. Whether we like it or not, it's something that just has to happen in order for us to have any shot at getting back to what resembled a normal economy in the past, or to have some sort of equilibrium in the marketplaces. Everything shot up in value far too fast. Way too much money was printed and borrowed during a very short period of time in history, and the only way out of this is once we went up, now we need to go down, okay? And of course the con is that a lot of people are going to feel economic hardship from this, especially people who haven't been responsible with their money, people that don't have anything saved, who have basically been living on credit, people who have been living on their home equity lines of credit, different things like this. Those people are going to be in the most trouble right now. And I've been warning you, so it's not like no one told you, but a lot of people don't want to listen. And even if they do listen or hear what you're saying, sometimes it doesn't register until it happens to you, unfortunately. Some people just need to learn lessons the hard way, and that's just a fact of life. So not much we can do about that, but nonetheless, it is going to be a con for those people. And really another con from this is that the economy could end up getting worse than we expect. Or on the pro side, it could end up being, not as bad as we're thinking it's going to be. The reality is no one really knows how far home prices are going to come down, how far the stock market's going to drop, how many people are going to lose their jobs. No one knows any of that stuff. So the outcome could end up being worse or better than we expect. And so either one of those could be a pro or a con, depending on how this ends up. Now the next one is similar to what we already covered in terms of assets, but a pro right now is that it's a very good time to buy gold and silver. And like I told you guys before, I am not going to stop promoting this because I do think everyone should own at least a little bit of gold and silver. You don't have to dump your life savings into it. You don't put all your bets on red at the roulette table. It's not like that, guys. A lot of investment professionals say you should have up to 10% of your portfolio allocated to gold and silver, real physical assets. And so there's nothing wrong with having diversification. And really the con is that a lot of people who refuse to listen to this right now are going to get burned financially, because a lot of the other assets or things they believe to be assets that they own will probably likely drop a lot further in value than they expect. I mean, if we look at the 2008 housing market crash, back then, gold went from $800 an ounce to $1,600 an ounce over the next 2.5 years. And I feel like we're at the same point in history once again, where everything's going down. It just started going down earlier this year, and we're going to see that trend continue over the next few years. So this could be a really good time to see the price of gold and silver go up. However, that's not the reason to buy it, because there is this saying that I just love that I have to share with you guys. And I think George Gammon said this. To put this very simply, guys, for people that don't understand why you need to own gold and silver doesn't make you rich. It keeps you rich. So what does that mean? It means that it is a tangible asset that you can hold in your hand, that is real, that continues to be worth something and continues to hold its value over centuries, okay? I honestly feel just like George, and that's one of the main reasons why I buy it. I don't buy it expecting to get rich. I buy it so that I expect in 30 years from now, it's going to be worth far more than I paid for it, and I can start unloading it little by little and use that as part of my retirement fund. So guys, go out and pick up some physical precious metals today. Get in touch with National Gold Group. Give them a call at 1-888-840-5945, or just use the link down in the description below and they'll get you set up with some real physical gold and silver assets. Check this out. Anyone who watched my Deauville demolition live stream about a month ago. Here's the latest. Now that it's been about a month, now it's just nothing more than a pile of rubble, and these bulldozers have been working around the clock pretty much 6 days a week here, demolishing the rest of it. Over here that wasn't done with the implosion, and then they got the bulldozers over here cleaning things up, putting it in piles and trucking it out in dump trucks. So little by little, this place is getting cleaned up. Now this next one really applies to would-be home buyers, people that have been on the sidelines, feel like they have been priced out of the market. And the next pro of this recession is going to be that people who have been smart and have gotten out of debt, they've improved their credit score, they have saved money for a future down payment, you people are going to be winning as this recession takes full hold and more buying opportunities come up for real estate. And on the flip side of this, just like we've been talking about, people who bought at the top of the market, put down minuscule down payments, and end up totally upside down on their properties where they have no equity left, are going to get completely burned from this. So you can pretty much just look at it as like people who were patient and did the right thing and waited for the right opportunity to strike are going to be rewarded by this recession, and people who are impatient and gave into the FOMO and just could not wait, had to have that house today, but I only had 5% to put down on it, they're done, guys. They're going to be upside down on their mortgage. They're going to be in a situation where they just don't have the equity, and all it's going to take is for that person to lose a job, have a medical emergency or family emergency, something like that, and that's it. They're going to lose their home, all because they thought that I need to buy it today or I'm never going to be able to own a home. And that type of mentality is toxic when it comes to home ownership. You know, patience and diligence pay off far more than FOMO ever will, guys, so keep that in mind. Now this is another one that is going to be a pro or a con depending on your perspective of the market and where you're at in life in general, and that is there was a lot of speculation and a lot of insane growth when it came to housing prices and equity and stock prices. So people saw their portfolios for their stock market accounts, you know, go up 50 to 100% in just a couple of years. You know, homeowners saw their equity go up 20 to 40%, depending on where they live. And it looks like, wow, this is amazing. I'm getting rich off of this by doing nothing, you know? But the con to that is going to be, because this was all out of speculation and basically the perfect confluence of different things that happened with the pandemic and the money printing and super cheap interest rates, because it was the perfect storm, and now it's time for all this to reverse. People who are relying on this to get rich or relying on this to have any sort of retirement are going to be finished. Just like the FOMO home buyers that bought at the top of the market that are going to be underwater or already are underwater by the end of this year or next year. Once again, this comes back to the patience and the greed, you know? Did you think that you were just going to get rich off of this whole run up in the housing market or the stock market and it was just going to go on forever? Depending on what type of financial moves you made during this whole thing is going to completely determine how it's going to work out for you in the end. Now this next one is totally related to real estate, and that is property taxes are going to go down. Well, why? Why are property taxes going to go down, Michael? Well, because home values are going down, and as home values go down, so do your property tax assessment. Now, to put into perspective, I can even use my own example of this, with my own personal property taxes essentially doubling in, you know, from this year to the next. Even if it goes down a little bit, it's still far more expensive than it was previously. So, you know, that's not great. But any savings is better than nothing, first of all. But this is really going to help people who have owned the same property for many years, because, you know, you already have a lower assessment than most people. And as the housing market goes down, so will your assessment on your property. So you end up paying far less in taxes every single year, which would really help people out, and you'll be saving money from this. But the downside, of course, is your home value is going down as well. And anyone who's been relying on their home value to make it through things and make it through life and pay the bills, like I said before, they're going to be the ones who get burned from this. And as you guys can see, part of the common theme of this video is that a lot of these can be pros or cons depending on your outlook on things. And I look at this next one as a pro because it's something that kind of needs to happen. It's a necessary growing pain that we're going to need to have in our economy, and that is credit of all kinds is going to tighten up, meaning that it's going to be more difficult to get a loan of any kind unless you have stellar credit and borrowing history. So you want to get a personal loan, I hope you got good credit. You want to get a loan on the property, I hope you got good credit. Have credit card debt or auto loan balances that aren't paid off and you want to buy a house, denied. So, you know, people who have been smart financially, guys, that's kind of the recurring theme. People that are not in a lot of debt, people that have been careful with their credit scores and didn't throw everything to the wind because the economy was in a scary position a couple years ago. And the con to all of this is that a lot of people are not going to be able to get credit where they once were able to. They might be seeing their credit limits being decreased on their credit cards. They might be seeing their home equity lines of credits being reduced or flat out just called in saying, hey, it's time to pay up. And this is going to cause people a lot of financial hardship. On top of that, like we talked about in a recent video, now small, medium, and large-sized businesses are going to be feeling the pain from this as well. Businesses are getting their credit tightened up as well. And when businesses do not have access to the credit that they've been used to having, guess what? They need to scale back business, which creates more layoffs and just makes things even worse, guys. But like I said, this is a necessary step that needs to be taken right now to correct things because there was just way too much cheap, essentially free money in the form of debt in the economy over these past few years, and the only way to get back to any sort of equilibrium is to take it away. So that's exactly what's happening right now. Now this next one, I'm going to start with the actual con instead of the pro because I feel like it just makes more sense. And that is, there are going to be more scams cropping up than you've ever seen before during this recession or the economic downturn, because this is when criminals can take full advantage of people who are desperate. And when are people desperate the most, guys? When you just lost your job or you don't have access to that credit card anymore, something like that. And that's when people are going to fall for different banking scams or credit scams, predatory lending scams, all kinds of things that can happen that people will fall for because they're desperate for money. And the good thing is, the pro of all this is that a lot of them can be avoided if you're smart enough to try and recognize a scam before it's too late. You know, when you get these funny text messages and people send you things that you've never heard of before, you don't click on it. Same thing goes with the emails. Or you get a letter in the mail, you know, offering to give you some type of special refinancing deal on your home because you have a lot of equity. You got to watch out for stuff like this because this is exactly how people are going to get taken advantage of right now. And keep in mind too, not all of this stuff is illegal. Some of this stuff is perfectly legal and it just requires you signing on the dotted line. And even though it could be predatory lending practices in the form of different ways to try to extract home equity from you or get you to borrow money that you don't actually need, whatever, that's not against the law, guys. So that's going to take your own due diligence and your own wisdom to basically push back against these things and not become a victim in all of this. And speaking of predatory lending, I had a whole segment planned for this video to talk about different things that are happening with that right now and different scams you're going to see with it. But I feel like the video is long enough and I'll save that for a future video. So if you guys want to know more about the different things that are happening with predatory lending again, let me know, because that topic is basically a video in itself. If you guys enjoyed this video, make sure you hit the bell notification down below. YouTube will alert you every time I put out a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.